All right, everyone. So I'm going to give you my game plan here for the week ahead. I am on my traveling trading station, as you can see right now. I had a funeral to go to yesterday, so my schedule's going to be a little bit funny this week, but well, Monday and Tuesday, but I'll do the best that I can. In any case, I'm going to go over the game plan for stocks that I'm watching here for the week ahead. And I always like to start these by taking a look back at the previous week. So when we talk about how this last week was, we start with big picture first. We can look at the S&P 500. The S&P 500 ended up having a red day. We had a sort of pullback day. Nvidia was down as well. We gapped higher and then we sold off. But in total, I guess the week was kind of ended flat because you had these three green days, but then we gap down, gap down. So more or less flat, but I think sentiment right now is still quite strong. Um, we do know that the Federal Reserve plans to cut interest rates just once this year, which is lower than what we had originally been hearing, but the market is still holding really strong. Something that I do think about with these interest rate cuts is the effect on the prices of housing, because right now with interest rates being higher, you're seeing a lot of people are staying where they are. They don't want to sell, especially if they got locked in on a lower interest rate that they got during the COVID era, the period of low interest rates. They're not wanting to trade in that low interest rate for a higher interest rate home. So you're seeing more people doing renovations and fixing a home that they're in to make it work for them rather than selling and then moving into something that has a higher interest rate. Um, but at the same time, home builders need to be able to borrow money to build. And so interest rates being higher affects new home costs. And the housing market is just very expensive even still. So I think they're hesitant to pull back too much on interest rates too quickly, as it could stimulate more spending and then bring inflation back up. And housing market prices, as you probably know, have not cooled off all that much despite high interest rates. I mean, maybe a little bit, um, but houses are still quite expensive. So that's SP 500 and kind of a big picture at the look at the market. Nvidia had a pullback day as well. A large cap stock that's been driving, a lot of interest this year. So we had a bearish engulfing candle on Nvidia, as you could see right here. So we had this sort of big red candle, price pushes down, then, high volume too on these 2 days. So as I've mentioned, I know a lot of traders like looking at Nvidia and trade options on it, but it's important to be trading with the trend. And right now, the trend seems to be moving, at least in the short term, down just a little bit. So try to be careful that you're not trading the wrong direction. So on Friday, we ended up having, I think it was three penny stocks that all went up, were up over 100%, which is an impressive move. I've been struggling with these a little bit. I mean, I always sort of have. We talked about this during the recap on maybe Thursday or Friday, and there was a good observation that someone made when I mentioned that my performance isn't very good on low price stocks, right? So we looked right here and we saw, performance isn't very good. And I said, well, you know, in fairness, you're not your distribution of trades is pretty low there too. You don't have a lot of trades in that range. Um, so, you're what if you just traded more there? And the reason I don't trade more there is because I know that that's not a place where I do particularly well. But let's go ahead and click on these trades just to filter on stocks under $2. So now we're going to go to the reports section and let's see, we're going to go detailed. So this is $367,000 on trades that are on stocks under $2. So the largest ever gain is 23,000, largest ever loss is 10,000. Average winner 838, average loser 679. It's not bad. Accuracy 66%, average winner, average loser. Um, but where it gets a little interesting here is when we look at this right here, total fees and total commissions. So the gross is 367. the net after those fees and commissions is 268, which means, that's a very large percentage of the profit that I'm losing to fees and commissions, and that's because of the broker that I'm with, and I just know that. So, right now the fees and commissions are nearly $100,000 on $367,000 of profit. It's like 30%, right? I mean, it's not quite 30%, but it's high. I'm rounding up, but it's awfully high. And this is the area where I sort of feel like, who am I trading for? Who's getting paid here? I mean, it's like my broker's getting paid more than I am. Not really, but it feels like they're getting an awfully large chunk of that. And that's what's sort of been dissuading me from, um, you know, not wanting to trade those more, or persuading me not to. So, this is a conversation I think that is going to come down to under $2 stocks. I should consider just using a completely different broker for them because my broker is just not catered to trading those types of stocks. It's just not appropriate, I think. It doesn't make sense. So that's probably the biggest takeaway. Days and times, I don't think we have anything really to look at there. Profitability is still during the same kind of range. Um, I think the real thing here is that profit loss ratio, it's not bad, but then that's gross. When we switch to net, the profit loss ratio, pulls back a little bit. It's still not terrible. Um, so now let's see. If we go back to, so oh, this is under advanced. So price under $2. So now let's look at the price let's look at between 3 and 10, which is kind of my sweet spot. At least that's what I typically think. So between 3 and 10 is $5.4 million of profit. Profit loss ratio 1 to 1, accuracy is a little higher at 66%. Um, Fees and commissions are, a little bit less. They're more in the 12% range, which is interesting. Now we go even higher, 10 to 20, and the thing here is that commissions go down even more because these commissions are fluctuating based on the shares that I trade. So profit loss ratio here, 1 to 1, accuracy a little bit better, but yeah. So anyways, something to be aware of. So that's the reason that my distribution of trades is going to be just lighter on the cheaper stocks. So this is where I'm at in the last 30 days. Go back to the last 60 days. Go back to the last 90 days. So kind of in the trenches here, just showing up every day, periodic nice green days. It's always great when those happen, but have also gotten hit with a couple of bigger losses. One of my goals right now is to try to keep these a little tighter, try to stop sooner, and I've done that. I've done a pretty good job of that the last two red days, which were $800 and 2,000. Small, moderate red days, very tolerable. Easy to recover from with one green trade. So I feel good about that. But if we look at the calendar here for the month of June, June is kind of wrapping up, and it's not been a super impressive month. It just, it's kind of been, unfortunately, my biggest day of the month. Well, I guess it's 13,000 green, but then I had a $9,000 red day, so I gave back most of that. Um, well, actually, not that bad. I mean, actually, I did a pretty good job because these 2 days were solid. But anyways, you get the idea. It's not been a great month. And so here we are coming into the last week, and my schedule's going to be a little bit funny because of travel and stuff like that. So Wednesday, Thursday, Friday will be normal, but Monday and Tuesday are going to be a little different. So um, yeah, that's kind of how things are looking right now. Usually, I like to be hitting 15,000 a week. That for me right now in this market feels solid. That has me at 600,000 a month, 60,000 a month, and then 600 to 720,000 on the year. That's feels like a nice place to be aiming for. When we were looking at my P&L on the year, I'm currently at about 75% of what I made in the entire year last year. and we still have like 6 months left. So I'm in really good shape there. Um, I feel great about that, but I want to sustain and maintain this average, and these last couple weeks haven't really helped me do that. At the same time, there, what can I really do when that's the case? So if we look at my metrics for the month of June, and well, it's fine. We could just, well, yeah, let's look at from June 10th. I don't know why this kind of was funny for me. June 10th, apply. There we go. Just go like that. So detailed, let's see. Yeah, so just these last 2 weeks here. Accuracy, profit loss ratio. These winners are so small. They're really small winners. It's just like not happening. Um, the 2 to 5 and the 1 to 2 hasn't been much on the more expensive side. It's just been slow, I feel like. So, all right, well, let's look at the continuation scanner for a second here. So on our continuation scanner, KAVL, this gave us one of the biggest moves that we had of the month. This was a week ago Friday when the stock goes from $1 all the way up to 8. But what was really interesting about that was just the day before the company had updated their shelf registration. And so we were all like, this is so weird. The shares are popping up out of nowhere, right? But coincidentally, like right after the shelf registration. And I was wondering, are we going to see an offering? Well, yeah, we did. We got the offering. It took a couple days, but the offering came in and now the price is back at $1.47. So not sure what to think about that, but anyways, the price is back down. So KAVL is out of play and I don't see it coming back into play. Um, MBIO, this is a lower price stock for me. I'm not going to mess around with it. ABTL, ABTE, big gap down. These are a challenge with these biotech pharmaceutical companies. They have negative results, and all of a sudden, stock can drop 75%. LGVN, this is one that some of us have been keeping an eye on, kind of watching that daily, because it is sort of holding it together. We might curl back up, but it would have been nice if it hadn't pulled back quite this far and started curling a little bit more in the $3 to $4 range. So that's one to keep an eye on. ZAPP, ZAP, I've had a few good trades on this one. Um, pop up, pulled back, came out again, another big move. But look at the shape of that candle, shooting star. Sellers pushed the price down, so it wasn't able to hold up super well. That 5-minute pattern is kind of weak there, so that's not great. BNED, Barnes& Noble Education. This one, it's been selling off. Did have a reverse split, so it's kind of wondering if this one could make a big move because now the float is super low. You can see the float right here, 368 million shares. Sorry, 368,000 shares. So a double bottom down here could be interesting, but I feel like with these, especially in this market without a catalyst, it's kind of like, I don't know, it's kind of hard to trust. Is that really going to do anything? Not sure if it will. Um, so BNED, yeah, we'll see about that one. MGOL, right, cheaper stock. Just kind of looking through here to see if there's anything else I wanted to talk about. GRDI, these are a lot of the cheaper ones on Friday that made moves. One theme that I've noticed is that we've had a number of stocks that put in like one really solid leg up, like right here, and then they kind of start to form pullback and they push a teeny bit higher and then they just kind of stall out. Now, some of them end up holding and going for another move, but a lot of them have been this kind of like one pop move. And in order to trade this well, I think the only way to trade this well is to be trading micro pullbacks. So I'll put the link to my micro pullback PDF in the description. I'll pin it to the top of the comments. You can download it if you want to. But the micro pullback, I would say, is probably the best way to be trading these, just because of the way these move so fast. I think the reason this is happening is because there is a degree of FOMO in the market. Traders don't want to miss out on, the stock that's moving. And so all of a sudden a stock starts to pop up. traders are jumping on it and they're just like, oh, this thing is taking off. They jump on really fast. But a lot of times it seems like that move is a little over enthusiastic, like it's kind of overdone. And then we finally get a pullback, and people are like, yeah, I don't know. The news on this isn't even that great. I'm not sure. The daily's only so-so, and sentiment kind of softens. So on a 10-second chart, that's going to be an easier place to watch these micro pullbacks. There was one at 75 cents on GRDI right here. You can see the top of this candle and the sort of the bottom. So it sort of popped up, pulled back just for a second, and then pushed higher. So that was a nice micro pullback. And there was another one right here around $1.10. Little top of that candle, a little dip, and then it pushes higher. So this is the spot where I'm kind of trying to do little breakout trades on these, buying that quick little micro pullback for the next leg up. And that worked really well in KAVL because that stock went from $1 to 2 to 3, 4, 5, 6, 7, 8. It just kept going higher. On some of these, I might only get 5 or 10 cents on it, or maybe I catch a loss, but I keep taking that micro pullback because when it does work, it can be really, really nice. So I think that is one of the stronger ways to buy these types of stocks that are moving quickly, just to wait for that micro pullback and then jump in. Um, I'll remind you, as always, that trading is risky, and you got to practice these strategies in a simulator before you're putting real money behind them. So manage your risk and be cautious, because of course my results aren't typical, but it's something to think about. Uh, ICU moving up, pulling back, moving up, pulling back. What was interesting on this is that it finally gave that extra push after hours at a time when there's really not a lot of liquidity or a lot of sellers. So I feel like this is kind of like someone sort of pushing that price up, hoping that it makes sentiment a little bit more bullish going into Monday. But I think that might be a trap. I don't know. We'll see. Maybe it actually keeps going. It's a recent reverse split, has a lot of room to the 200 moving average, but I'm a little skeptical if we're going to see a bigger move on that. So I would say my game plan right now for the week ahead, I'm going to be a little cautious. I'm recognizing that sentiment is, I mean, it's just, we've got some FOMO in the market. We're seeing some quick pops, but they're mostly on lower price stocks. A lot of these moves aren't being sustained super, super well. So I've got to be hitting quick base hits, get in, get out, don't overstay my welcome, and live to trade another day. So that's kind of where I'm at right now. I think that we will very likely see some nice moves this week, but I don't know. Uh, I think we'll probably see, I think for traders focusing on base hits, you'll see a lot of opportunities. If you're trying to hit home runs, I think you're going to get frustrated. So I would settle in, lock up some base hits, get green, get out, don't overstay your welcome, and I think that'll be the ticket to success for the rest of this month. And then, if we start to see something pick up and go really crazy, that's great, but I don't know that we will. GameStop, not really a topic of conversation at this point. The price has pulled back quite a bit. Uh, Roaring Kitty is getting close to break even on his position. So I don't know what's going to happen, if he's going to go into, back into uh, hibernation and then come back, out of the woodwork in 3 years or 6 months or whatever. But he got kind of crushed by GameStop selling shares on the open market with their offerings, and that kind of wrecked his position. And I don't know, not sure what's going to happen. So, anyways, his position's back down close to break even, which is 700 million of unrealized profit that was lost, but he's still up, 200 plus million. So he's had generally a pretty good read on it, but he's holding on to about 30% of what he had at his peak. So not a great thing. No one loves to have that happen, but that was I think out of his control, unfortunately. So he did the best he could with it, but yeah. So GameStop, not interested in that. AMC, same, meme stocks, leaving those alone for right now. They're going to go back into kind of obscurity. People aren't going to pay attention to them for a while, I don't think. All right, so that's just as well. Penny stocks, though, are continuing to be in focus. Those are tricky, so I'm going to do the best I can to trade during this theme of penny stocks being in focus and wait until I start to see some nice big wins before I step up and get more aggressive. All right. Thanks as always for tuning in. I'll see you guys in the morning, and I hope you hit that thumbs up, subscribe to the channel, and I'll remind you again that trading is risky. My results aren't typical, so manage your risk, take it slow, and I'll see you back here in the morning.